A very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of Market Movers, we will be considering the trading opportunities arising in the S&P 500 after it has started to rally again, and we will be also considering the USD along with it. The bit sentiment seems to have taken over most of the financial instruments, notable exception being the gold, which has dived lower in today's trading session as the treasury yields for the United States are rising. Equity segment is seeing renewed buying momentum even after Mr. Powell laid out a possible timeline for taper of quantitative easing in yesterday's post FOMC monetary policy announcement press conference. Maybe it is stemming from increasing confidence in economic prospects. Markets have started to look past the Evergrande developments with Chinese authorities stepping in to manage the fallout. We will also take a look on the data which was released early in the day, and also, as I said earlier, the trading opportunities in S&P 500 in this fast changing environment. Let's consider the economic releases which we have got early in the European trading session. We got market PMI data for euro area right after the PMI data of its largest economy of Germany. Both the reports are pointing to the slowing of economic growth momentum with dip in numbers for manufacturing as well as the service sector, which effectively brought down the composite PMI to slowest expansion in almost half a year. The euro area composite PMI flash estimate is at 56.1 in the month of September, well below expectations of more than 58. Multiple factors, including reenactment of caution on part of many consumers on account of Delta variant spread in European countries, seems to be a major contributing factor here. Today, we had another major central bank announcing its monetary policy, the Bank of England. It left the monetary policy unchanged. We are having the interest rates at 0.1%, while the quantitative easing, the asset purchase program, continues to run with the total envelope of GBP 875 billion. So I think it is a mistake here. It is 875, not 895 billion GBP. And here we didn't really get any surprise like yesterday's hawkish undertone from the Fed, but we do have to take note of the fact that more MPC members are becoming favorable to modest tightening of financial conditions, which have given a shot in the arms for the GBP bulls to make it one of the biggest gainers today. Now let's move to the North American data release. We will consider the initial jobless claims for the United States, which saw increase for second consecutive week. These are at 351,000 for the week ended 18th of September. It's a negative surprise, though too early to say. Economic conditions are getting difficult. We will be able to make these assessment better once we get more data next week. Now let's turn our attention to the technical side where we will consider the S&P 500 first, and afterwards we will also take a look on the USD JPY to see if it is offering any trading opportunity. Let's start the technical segment with S&P 500. This is the daily time frame chart, and this is an interesting chart here. As you can observe, we had this continuous rise, and we had this formation of higher highs and higher lows, and these lows fit quite well on these upward trend channel. But this time around, we had this dip, and it lasted quite long. We had the correction starting closer to 4,550 and extending all the way on the lower side to 4,300. So it will be interesting to see if this time around, as this rally has resumed, how far the S&P 500 will be able to go. We are now at a crucial juncture and looking at the trading momentum in today's session. I do feel that today the closing is going to be quite strong, but moving forward for tomorrow as well as for next couple of sessions, the question is going to remain if it is simply the retracement of this prior decline, or we are clearly looking at a fresh resumption with the possibility of formation of new all-time highs in coming days. So that's an interesting question, and we will mostly have to rely on lower time frame charting while making that assessment on any given day. So for today's session, we will be utilizing some critical markers like central pivot point, which is there on the higher side closer to 4500, and I feel that is where we can expect the S&P 500 to rise in this near term bullish momentum. So I am pinning my hopes on S&P 500 continuing to rise at least till the central pivot point, and that is where the consolidation phase was unfolding for last week, and then after this breakout, it went on to this second support of this month's pivot point series, and this double bottom kind of formation has now given hopes for many market participants to believe in this upward momentum, this resumption of rally, and here we are seeing the S&P 500 inching closer to central pivot point again. So if you are going to trade in today's session, I think it is better to go with a bullish trading perspective, go for any buy on dips kind of opportunity. But as I look at the chart, I think it will be pretty tough for any new trade to be initiated. And mostly we will have to wait for further deep maybe. And as long as the S&P 500 is holding well above this S1, the first support of this month's pivot point series, which is also close to this immediate swing high established in middle of this double bottom kind of formation, we can rely on this 4400 level to act as the near term marker, and as long as price action remains above that, I think we can take our chances to buy the S&P 500 while looking at the possibility of retesting of this central pivot point. The regression curve remains steeply inclined towards the lower side, but one thing to take note of is that the price action has now jumped above is upper band, so that is something which you need to be mindful of, and that points to the strength of conviction on the part of S&P 500 bulls. If we have to take the cognizance of these SMA formation, we can utilize this convergence of 50 and 100 SMA closer to or just little below 4400. And I think, as I said, along with this price action and the viewpoint, we have one more reason to believe in this crucial area closer to 4400 acting as a strong support, and that is what we have seen in today's session. We have seen this correction early in the early in the opening hours of today's US session, and after that, the S&P 500 has jumped on the higher side by almost 1 percentage point. So keep a close eye on this and utilize this convergence zone. We can go for any trade as long as the level holds and we can keep the stop loss. I think anywhere close to 4370 or thereabout should be good enough, and on the higher side, as I said, we can expect the price level of around 4500 to be retested again in coming days. Now let's see what's happening on the currency side. This is the daily time frame chart, and here after this sharp reversal, after making a low closer to 109.10, here we are looking at the USD JPY climbing past the 110 level, and this time around it looks likely that finally we can expect a breakout on the higher side. Though unless and until breakout indeed comes, we can't be too patient about it. But looking at this price formation where the momentum is quite strong, I think we can expect this to last, and maybe we can this time around expect the climb of USD JPY to last at least till this immediate swing high, which is there around 110.7. So for today as well as for next couple of days, we will do well to keep our trading bias on the bullish side for USD JPY. Here we are trying to trade within the range, and this range is likely to expand toward this prior swing high, if not much. So for any trade to be initiated in the USD JPY, we will have to take help of these immediate central pivot point, which is there around 109.90. And even in today's session, this is where the USD JPY was consolidated in intraday, and now it has gotten the fresh arm in the short in the arm, sorry, and we have this strong momentum helping it climb past this prior swing high. And with this, we have the formation of higher low and higher high this time around. If we consider this low, there is not much of a difference, but it is slightly on the higher ground. And now we have this high, which is also on the higher side. So we can expect this bullish momentum to continue, and we can take our chances while trying to go for the buying opportunities. But given the fact is almost 100 pips rise from yesterday, we do have to be careful, and we will have to mostly take help of lower time frame charting while trying to optimize the entry and exit points. We have these three SMAs converging closer to 109.70, and this is likely to act as the strong support for the USD JPY. We can expect this 50 SMA to cross above the 200 SMA, giving us a golden crossover formation on the hourly time frame. And after that, we will have more reasons to be confident of our assessment. So I would say that keep looking for opportunities, keep looking for dips in the USD JPY, and as long as it holds well above this support area, you can take your chances to go for any long trade while keeping the stop loss anywhere closer to 109.5 in near term, while expecting the rally to continue. And in course of time, we can target the price close to 110.5 or even more than that. So that's my assessment looking at the current price formation of the USD JPY. If any of you have any query to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. For further coverage of the market developments, do check out the Dukascopy Analytics page. To starting to trade, the JForex platform offers an excellent trading environment. We are also available on the Facebook. Do join us there. Thank you all for joining in. See you next time. Till then, goodbye.